Good morning, everybody. This is Christy Johnson with Premier Marketing, and today we are going to be with Amanda Blackburn with Mutual of Omaha, and we thought it would be a traditional long-term care is something that I would like to reintroduce because we do think it's a valuable product. And Amanda has been with Mutual of Omaha for 18 years, and she is the brokerage health sales director for the long-term care insurance side. So with that, I'm going to turn it over to Amanda.
Great. Thank you so much, Christy. I appreciate that Premier Marketing has invited me to speak with your distribution today. I'm very happy to be here representing Mutual of Omaha and our traditional long-term care product. As the slide says here, we're here today and we're here to stay. So traditional long-term care is a very important product. And I can tell you from the Mutual of Omaha side, the CEO here, James Blackledge, is a very strong believer in the product and that there is a need out there in the industry. We know that there is no government viable solution on the horizon. And so as a private insurance carrier, we want to be able to bring product solutions to middle market America that are needed. So very happy to be here and one of the longest standing traditional long-term care carriers in the marketplace today. So very excited to be with everybody. And I first and foremost also want to just thank everybody for taking time out of their day to be with us and learn about our traditional product. I do want to also say that if anybody has questions throughout the presentation, we will be allowing some time at the end for questions and answers, so feel free to hold that question and ask it at the end. But if we are talking about something and you need to interrupt during a specific part, feel free to do that too, whatever works best for you. As Christy mentioned, I've been with Mutual 18 years. Before I jump into the product benefits and features, there are a couple things I really want to just kind of back up and take a holistic look at. From the carrier perspective, here at Mutual of Omaha, I want to make sure that you understand what our mission and vision is as a carrier. We are a full suite of insurance products, so long-term care is not our only product out there. But I can tell you that as an insurance carrier, we are not just a manufacturer of insurance products. We are here to develop solutions, long-term care solutions that our consumers need, and that will work the way they expect them to work come claim time. So just to kind of key in, I wanted to share what our mission and vision is as a company. We help our customers protect what they care about and achieve their financial goals is really our mission. And our vision is for every customer out there to have a financial future imagined, planned, and secured. So with that, I thought I'd share with you our strong, stable, and secure position within the industry. For over 100 years, we've been able to maintain high ratings with each of those leading rating agencies. So with AM Best, we've got the A+ superior rating. Moody's Investor Services rates us as an A1 good rating, and Standard & Poor's is an AA- very strong rating. So very proud of those ratings and the fact that we're able to continue to promote those year over year. I wanted to include this company sponsorship slide just to make sure that you were current on the programs and sponsorships that we offered. Mutual of Omaha is a household name out there, and we're wanting to help make your job easier as a producer in the industry promoting us by having a name that your consumers recognize. We're still out there promoting Mutual of Omaha's Wild Kingdom. Everybody knows the Wild Kingdom. Back in the Animal Planet days, you've got Marlon Perkins, Jim Fowler, and Peter Gross. So all names, most people that you go into their homes and you're talking about insurance can resonate back to Mutual of Omaha. We also have pro golfers that we sponsor: Russell Knox, Ian Poulter, Henrik Stenson, and Ryan Moore. So just a few names I'd like you to be aware of as you're out there promoting Mutual of Omaha. So before, as I mentioned, we jump into our traditional product benefits and features, I thought it would be good to just kind of hone in on the actual need for long-term care. So almost 70% of people over age 65 will require chronic care later in life, so for an average of 3 years. And 20% of those individuals will need that care for longer than 5 years. So just a fun fact that long-term care is a needed product out there. Long-term care services can be expensive. We all know that. In fact, based on national average costs, people can expect to pay more than $85,000 per year. And I'll go into some of those costs a little bit later in the presentation, but just at a high level, $85,000 per year for a semi-private room in a nursing home, and that figure can expect to continue to rise. So the need is definitely out there. With the need, I think it's important that we also take a step back and look at the evolution of the long-term care products and how have products really evolved into what they are today and what the true need for the consumer is. So as consumers' needs have changed over the years, the industry has reacted as a whole in developing solutions to meet those needs. And, really, I look at it as you as producers have the hardest job out there. There are so many different carriers and product solutions that are out there today, which is great. People are talking more today than ever before about long-term care. And so really, we see that as a huge value piece within the industry, very positive from the Mutual of Omaha standpoint that we've got so many competitors out there and that we're all trying to really fulfill the same need by getting more long-term care insurance coverage into more clients' homes. But what used to be nursing home only coverage has really evolved through the steps of progression of care. And I'll talk about that a little bit more on the next slide, but it's not just an assisted living or a home health care coverage or a cash only policy. What we now are offering are solutions that are comprehensive coverage that really combines all of those types of benefits. And here at Mutual of Omaha, I wanted to just mention that typical shelf life for a product, and this really holds true beyond Mutual, is 3 to 5 years. And Mutual of Omaha has been offering our same strong, secure, traditional long-term care product since we developed it back in 2009. And I can tell you, being in a sales role, that I stay in contact with our actuaries often, and we continually hear time and time again that they're very happy with our product, with the way it's been priced, but they also know that the features within our product are what consumers need, and there's no need to change what we've got going at this time. So just to give you a little bit of background on how we got to the product that we are marketing on the streets today, in an effort to identify the right people or the right long-term care buyers and non-buyers, back when we were developing the 09 product, we had initiated a research project to get into the hearts and minds of those people who own policies from other companies, own Mutual of Omaha policies, and what we did is we put focus groups together that made up those buyers and non-buyers. We really wanted to know who those people were, why they buy, why they don't buy, how they prefer to buy, what steps they take to educate themselves before making a buying decision, how they feel about long-term care insurance in general, and how much they understand about the risks they face if confronted with a long-term care need. One of the fun facts that came out of that research that I think is important for you to know is that if you're not out there having that conversation, your clients are probably researching and becoming educated on their own. So if you might as well be the one to bring that conversation up and educate them on it, or they're going to eventually have questions that they're going to need to research on their own or talk to someone else about. So huge opportunity for you as a producer out there. In talking about the progression of care, I just wanted to kind of walk through this slide because it really touches on how the policy benefits that we've got within our program work with each step throughout that piece. So you've got neighbors, families, friends. We have a cash benefit. Most of us know that if a long-term care need arises, a family doesn't know what to do day one or how bad it's going to get. But having a cash benefit available to help with no elimination period day one is huge. As the progression of care happens, and care in the home health care, whether it's stay-at-home benefits, home modifications that they may need, medical equipment, our policies cover all of those types of services associated with long-term care. Then they could end up progressing to the point that they need to go into assisted living or nursing home. And again, our policies cover all of these things. So just to kind of hone in on how you can start having those conversations, knowing that the need for long-term care is probably the most catastrophic, unexpected event that could happen, and failure to not plan for long-term care financing can result in the following consequences should the need for long-term care arise. Because this need for long-term care can typically remove any level of security one may experience, long-term care, we know, is a family issue. An estimated 65% of older people with long-term care needs rely exclusively on family and friends to provide assistance. So talking with your clients about the need to plan for long-term care is one of those most critical conversations you can have, yet it's not always easy getting people to open up about the important topics. So I wanted to just put here on a slide some of the things you can ask your clients. Where do you see yourself? What do I want my plan to look like? Who will I take care of, or who will take care of you? What is your plan if you need care? So if family, where do they live and how will they help? Have you spoken with your children about long-term care planning? And who coordinates your plan of care? Those are all types of things to get that discussion going. And then what happens when a long-term care event happens and you have coverage in place? I think it's good to help a client understand the differences there. If you don't have a plan and if you have a plan. Clients, if they have a plan, they know what happens next. They can choose to stay at home versus being put into a place or a facility that they don't want to be at because they don't have the right assistance or support that they could leverage through a long-term care policy at home. They're able to maintain their independence, protect their income and assets, avoid dependence on family members, and access to a care coordinator and high-quality care, which we'll talk a little bit more about as we jump into the policy benefits and features. So before I dive into the product features and benefits of our Mutual Care Solutions policy, I think it's important to understand the value of traditional, because there are so many different solutions out there. Understanding the value of long-term care, a traditional long-term care, so that you are having discussions with your clients and doing your due diligence as a producer to determine the best product for them. So, you have to ask your clients, what matters most to them? Is it their family? Is it their home? Or is it their nest egg? For people who end up needing long-term care services, a traditional long-term care policy can provide the most comprehensive benefits, plus valuable built-in services like care coordination, which I mentioned previously and we'll talk more about here. And the policy may also be partnership qualified, allowing insureds to protect a portion of their assets from Medicaid spin down, something hybrid product solutions don't offer, just to kind of key into the differences there. Mutual of Omaha offers two long-term care product solutions that I want to talk about today. Before we jump into those, I wanted to just show you here on a national average what home health care, assisted living facilities, and nursing home, semi-private room, private room, one-bed unit, home health aid, what those costs could be per hour and per year. I won't read through every one of them, but you can see even a nursing home per day, $237 on average per year. That's over 85. It's $86,764. So that's expenses that if they don't have a plan in place, they'll deplete their savings. They could deplete their retirement plan. So all these years of planning for retirement could be, out the window within a few years if they don't have a long-term care plan in place. So the cost of long-term care services, asking your clients how will they pay for it? Will they self-insure? Will they care or financial support from family, Medicaid? Or do they need a solution that will help them protect their assets and preserve their independence? Just a quick snapshot here on this slide. This chart above shows the value a long-term care insurance policy can have if your client should need long-term care services. So the amounts listed in the care based on a 3-year period, 90-day elimination period, 30% cash benefit, which we'll talk about here in more detail, partnership plan, 3% inflation, 100% assisted living, 100% home health care reduction, and no discount cash benefit at $900 monthly. So you can see the differences between a male and a female, what that annual premium is. If you look out 30 years until they would need the coverage to kick in, let's say at age 80, look at the amount that they paid in, that $32,000 for a male, $51,000 for a female, versus what home health care assumed at the 3% inflation rate would have been built up to, or a policy benefit with 3 years with 3% inflation. So you can clearly see the value of a traditional long-term care policy and what that will add. So jumping into the actual product solution, we have two different solutions that we offer. Our secure solution, which is the traditional benefit design, and then we also offer the custom solution, which is a pool of dollars design. I really want to just kind of key into, why you would look at one over the other. Customers who are looking for easy to understand benefits and the security of knowing they have some measure of coverage of asset protection in place, this secure solution is perfect for those types of clients. So if you're an agent who likes a product with a simple design and traditional benefits, this is a great solution to look to. From a custom standpoint, customers who want a customized policy to fit their own unique needs. If you're an agent who are looking for a product with a strong premium solve capability, so for example, we'll talk about our inflation options later, but if you have a client that says, I can afford $250 a month, we can work to develop a policy with you that will offer them some coverage is better than none, but will offer them something to meet that budget need. So that's really the flexibility of the custom plan that I think people are really attracted to out there when trying to develop some level of coverage for their clients. So in creating MutualCare solutions, we took the features our clients told us they liked. So I mentioned that research survey we had done, so like the cash benefit being one of our top ones, and found a way to make two great new product options. Both policies in this portfolio provide coverage for home health care as well as care received in assisted living, nursing home. All of those things are covered within our products. So first, let's touch on how your client becomes eligible for benefits. If they are deemed chronically ill and a licensed healthcare practitioner submits a plan of care prescribing long-term care services, this means they must need help with at least 2 of the 6 activities of daily living. So that could be bathing, dressing, eating, transferring, toileting, and continence for at least 90 consecutive days. The client is also eligible to receive policy benefits if they are certified to need continual supervision due to a severe cognitive impairment. So that's how your clients would qualify for long-term care coverage. So once they become eligible for these benefits under the policy, they have to meet their elimination period, or that elimination period would begin. So that is a waiting period before the benefits are payable. So as long as the client remains eligible, benefits under the plan will be paid until the policy limit is met. Okay, so that's how the overall plan will work. The client will have 2 options under our policy. They can choose to go on cash, or they can choose to go on reimbursement. Cash gives the client the flexibility to pay for any service that supports a plan of care, okay, under the long-term care side of it. Reimbursement will provide reimbursement for actual long-term care expenses incurred up to policy maximum monthly benefit after the elimination period has been satisfied, okay? So keeping in mind, if they start out on cash and then they want to move over to the reimbursement, because the progression of care like we talked about, they would, at the point they move to the reimbursement, have to satisfy their elimination period. So the features we all highlight within our policy, which I'll dive into a little bit more detail, but the cash benefit with no elimination period is one of our sweet spots. The monthly benefit amount, calendar day versus service day, and stay-at-home benefits, as well as our low inflation. Okay, so our policy is for issue ages between 30 and 79. It is partnership qualified, which gives the long-term care policy holder a Medicaid safety net. And I don't want to spend a ton of time on partnership, but I do think it's important to understand that in 2006 is when the Deficit Reduction Act was signed, and it enabled states to create long-term care partnership programs. So these alliances between the states and private insurance companies like Mutual of Omaha basically encourage people who otherwise might rely on Medicaid for their long-term care needs to purchase partnership qualified policies. So the goal is to help stabilize Medicaid by delaying people's use of the program. So insurance companies like Mutual voluntarily agreed to participate in a state partnership program by offering long-term care policies that meet specific requirements. So in order for it to be included as partnership, it has to be tax qualified, and it must offer some level of inflation protection based on age at the time of purchase. So one of the main benefits of a long-term care partnership plan is that they allow individuals who deplete their long-term care insurance benefits to retain a specified amount of assets and still qualify for Medicaid, provided they meet all of the Medicaid eligibility requirements, of course. So partnership qualified policies affect a person's assets only, not their income. So the amount of a person's assets equal only to the long-term care benefits that they have been received. So if all insurance benefits were exhausted and an individual applies for Medicaid, he or she will need to spend down any assets above the amount of the policy. So it really is a dollar for dollar asset protection, okay? All right, here's a grid. I'm not going to spend a lot of time on it, but we do have this available for reference that basically shows what each state has approved based on age and inflation option chosen to be partnership qualified. So you can obtain that by reaching out to Christy or anyone on the long-term care team at Premier Marketing. So let's just kind of give you an overview of the two different policies that we offer. The policy limit is the initial maximum amount payable over the life of the policy. Okay, so under Secure, we offer 2, 3, 4, or 5 years, and then under Custom, it's $50,000 to $500,000. We have the monthly benefit, so that's the initial maximum dollar amount your policy will pay each month. We offer between $1,500 and $10,000. Okay, the elimination period is the waiting period that represents the initial number of calendar days the insured must be chronically ill before the benefits are payable under the policy. So there's two types of elimination periods. There's calendar day and service day. And I think it's important you understand and know Mutual of Omaha is calendar day. 90 calendar days means the waiting period begins the first day of covered services received and ends 90 days later. The difference with service day is that the 90 service days means that waiting period begins the first day covered services are received and ends after services are received for 90 days. Not necessarily are they consecutive with a service day. So if the insured is not receiving cash, the elimination period on the first day he or she is chronically ill and receives a covered long-term care service, subsequent days during which the insured is chronically ill will be used to satisfy the elimination period, even if a covered service is not received on those days. The elimination period is cumulative and needs to be satisfied only once during the life of the policy. So the policy is calendar day, as I mentioned, not service day. Secure, we offer 90, 180, or 100, or 365 days, and under Custom, we've got 0 to 365. I do want to point out that the monthly versus a daily benefit, which again, Mutual of Omaha offers the monthly, allows greater flexibility to maximize policy benefits. So without spending a ton of time, I just want to make sure that you understand the value between the monthly and the daily benefit. So with a policy that pays on calendar day EP versus service day, when comparing monthly versus daily with that in place, on a 30, if you're looking at a calendar with 30 days, you can quickly see that the value from a policy benefit level that brings your client the most benefits. Basically, if you look at under the daily benefit, let's just take an example of a client would have received $3,000 within a month, within a 30-day calendar period, with a daily benefit of $200 and a monthly benefit of $6,000. Under the monthly benefit, the client would have received $3,650 in benefits, or $7,800 more a year, just to kind of show you the difference or the value there. Let's jump over and take a look at the nursing home, assisted living, home health care, some of those features within the product. So many people, they prefer to stay at home as long as possible, as we've talked about. The policy provides benefits to help get the care your client needs in the comfort of their own home, providing 50 to 75 or even 100% of that maximum monthly benefit for home health care services. So sometimes more care is needed, and they can choose to leverage some of these other policy benefits, whether they need to go into an assisted living, home health care. There are options for reduction, but again, they can get 100% coverage there. We do provide bed reservation benefit of 30 days per calendar year on our product. From a respite care benefit, we have 1 month per calendar day. So if your unpaid caregiver needs short-term care, or your client's unpaid caregiver needs short-term care relief from the duties of providing care for their client, we will pay expenses that the client incurs for covered services for respite care up to that 1 month. From a hospice care standpoint, if your client is terminally ill and receives hospice care, we will pay the expense incurred for covered services up to the applicable monthly maximum benefit for each month the client receives services. And then we do offer an international benefit, so if the client meets the eligibility for the payment of benefits while outside the U.S., its possessions or territories, Canada, or the United Kingdom, we will pay for monthly international benefit each month for a maximum of 12 months. Not available under the cash benefit. We do have waiver of premium options, and then we also offer an alternate care benefit, which is available when a care coordinator is used. We realize there might be long-term care services in the future or treatments that don't exist today as the medical field continues to evolve. So we like to have that alternate care benefit that's available should those types of services get approved by a care coordinator and be needed for your client. All right, from a optional partner benefits, I think this is another area that Mutual of Omaha's benefit features stand out or really are where our sweet spots are is with our shared care. We also have a security benefit that's different than what you'll see in terms of other riders in the industry. Shared care allows one insured to access benefits under a partner's policy. With Mutual of Omaha, both of them must be identical at the time of policy issue. We also allow that once benefits under one partner's policy have been exhausted, they can access partner policy benefits provided they leave at least 12 months of coverage available for their other spouse. Just to touch on what that security benefit is, it provides an additional benefit without reduction to the policy limit when the insured is receiving benefits and his or her partner is alive and the unhealthy spouse goes unclaimed. So this rider can be confusing, but I do want to step back and just kind of break it out for you because a lot of times, I don't know how many of you have had a sale where you've got a husband and a wife, one's approved and the other one is not, and then they both decide I don't want the coverage, okay? Well, Mutual of Omaha wanted to come up with a rider that would help save those sales and still bring some level of coverage into the home versus none. So this security benefit is totally predicated off of the healthy spouse. So the unhealthy spouse is not underwritten at all. We don't really look at them at all. What we're saying is if you want to apply for this because you have a partner and you as the healthy one goes on claim, who's then going to take care of the unhealthy one? We want to provide a whole nother level of coverage into your home to help with that. So that's really what this rider does. It pays the insured an additional 60% of the reimbursement benefit each month. So excluding the cash benefit, if there is any, for covered services received. And if there's any questions on that at the end, I'm happy to help answer those. We also have the joint waiver of premium on the custom plan, and then we have the survivorship benefit on the custom plan as well. The joint waiver of premium waives premium for both partners when one partner is on claim, and the survivorship benefit, which is on the custom plan, allows an insured to have a paid-up policy in the event his or her partner dies after the policy has been enforced for at least 10 years. A couple other optional benefits that we offer that's available on both of the policies include our waiver of elimination period. So that enables insureds to receive home health care benefits without having to satisfy the elimination period, and the rider can be dropped after issue, okay? Non-forfeiture, that allows coverage to continue on a reduced basis in the event that the insured stops paying premiums. The policy must have been enforced for 3 years in order for the provision to take effect. Return of premium at death, returns premium paid on policy minus any claims paid upon insured's death. We also offer the return of premium less claims paid before age 65. We offer the professional home health care benefit as well on the custom. So basically it's an optional rider that makes additional benefits available when home health care services are provided by a nurse or a skilled professional specializing in physical, respiratory, occupational, speech, I think audiology, nutrition, also chemotherapy admin. So for any of those types of services, this is an opportunity to get additional coverage in place. So it helps with those types of benefits. From an inflation standpoint, I did want to kind of hone in here and share with you what our policy offers. Under the Secure, we have 3, 4, or 5% compound. We have 20-year with a 3 or 5% compound. And then under the Custom, we have from 1 to 5% available. And then we have the Lifetime with 20, 15, or 10 years. There's the option for inflation with the buy-up or buy-down that's available under Custom. So this is where, when I was talking about the ability to dial into a specific premium, this is huge with our policies. So if you take a look at, let's look at the buy-up option specifically. Insureds may increase a % of their inflation applied to policy benefits not to exceed 5% on or before each policy anniversary. So they have this option with no additional underwriting to increase their policy inflation once a year. So the increase is effective on the policy anniversary date following the election, with benefit increases occurring the following anniversary. It's available prior to the lesser of 20 years or to age 75, and premium of the policy is based on the insured's age at the time of the buy-up. The actual premium will include a premium credit based on the type of coverage and how long the policy has been in force. What is really nice about our policy with the buy down, which is unique, I think, within the industry, is that with the buy down, it's available to a lower inflation. You can move to a lower inflation percentage at any time while retaining all of the gains applied to the policy as a result of the inflation rider. So a lot of times if you're buying down, you don't necessarily, I don't think with other carriers, get to keep all of those gains. With Mutual of Omaha, you do. I wanted to give you a snapshot between both policy options of the premium allowances that we offer. So if you have partners and they are both issued, they apply and they're both issued, we'll allow 30% allowance. If they both apply and one is issued, we'll offer that 15%. We're still one of the carriers within the industry that offers a premium allowance of 15% for a healthy applicant. So preferred is at 15%. We do offer an association allowance of 5%. So if there's an association that the individual is a member of, they can obtain that 5% if it's approved with us. As a producer out there in the field, you have access to a 5% allowance if you write a policy on yourself. And then we also have what we call our common employer program. And really what this is if you have at least 5 individuals that you're able to take apps on from a common employer, then they can get that 5% allowance. It's really more of a referral program. And then the default premium payment option on our policies is lifetime. Wanted to key into care coordinator services because I think they're very important when it comes down to what that policy offers. So Mutual of Omaha has care coordinator services that your client would have access to. That provides a licensed healthcare professional. They do not have to meet an elimination period to get access to this person. It helps your client assess their needs, develop an individualized plan of care, and arrange for long-term care services. So when used, clients may be eligible for stay-at-home benefits, as you can see there on the slide, caregiver training, durable medical equipment, home modifications, medical alert systems, anything that they may need that care coordinator can help with organizing. As we kind of wrap up the policy, I wanted to just share with you what you have access to run a quote or illustration. I do encourage you to reach out to the long-term care team at Premier Marketing. They can help direct you or assist with these quotes or provide you with direction on how to get access to these systems. I highly encourage you out of these options to really hone in on the MutualCare Solution software. This software truly can train you on our product by making certain selections and combinations of features for your client. You can truly put in there a specific premium amount. Hey, my client can afford, $300 a month. Here's what I'm going to play around with to get them some level of coverage within their home. It'll let you know by highlighting at the bottom whether it's partnership approved, whether you can or you should not be including a certain combination of benefits together. So we've received a lot of very positive feedback within our distribution, letting us know that that is top of the line software. So I do encourage you to check it out if you're not familiar with it. From a materials standpoint, I just wanted to let you know that we've recently rebranded our materials and have a lot of resources and tools that are available to you today by going to our sales professional access site at www.mutualofomaha.com/broker. You do need to be registered on that site, but you can get to anything that we have available to assist you, whether that's product details, underwriting, sales and marketing tools. We do have a cost of care calculator out there and all of our forms and materials. I encourage you, if you write business with us, to check out our e-application. You can get access to that through SPA, or again, the long-term care team at Premier Marketing can assist with that. If your client has questions on claims and what we've paid out over the years, again, we've been in the long-term care business since 1987, and so we've got some brochures that hone into how that claims process works and our backing of paying of claims. So I encourage you to take a look at those. If you are a new producer to long-term care and you really are looking for that A to Z training on long-term care, we have what we call our career development program, and it can assist with training how to start that conversation. It talks about traditional products, the types of long-term care services available, so I encourage you to check that out. Keep in mind that we do offer a long-term care marketing credits program. This is an opportunity for you as a producer. If you can get to submitting and issuing 5 long-term care apps with Mutual of Omaha, you can start to accrue money after that 5th app that we will give to you to utilize for purchasing leads, whether you need paid postage on mailings. We have people submit reimbursement for newspaper ads, CLT designations, seminars, so a huge opportunity if you become one of Mutual of Omaha's producers in writing at least 5 or more long-term care apps. I wanted to include this slide because we, this year, are conducting a number of underwriting teleconferences, which I encourage you within the distribution to dial into. So there's no webinar, it's a phone number and a code that you join us every few months. It's our director of underwriting just did one last month. And up and coming, we have operations and more underwriting. So there is a flyer that gives those dates and phone numbers and how to access those. So I encourage you to reach out to Premier Marketing and ask for that if you're interested. That, Christy, concludes my presentation on the Mutual of Omaha traditional product. Are there any questions out there?
Amanda, we have one. They're asking us, does the common employer discount work for retirees?
If they are part of a common employer program, then yes, as long as they are if they're retired, that's a great question. I would have to actually look into that and just verify if they're retired. The problem there is I don't know if they could get 5 apps submitted. So if they can get 5 apps submitted to us, I'll verify if 1 or 3, whatever number it would be retired if we still consider that common employer. Who should I follow up with on that, Christy?
You can just follow up with me. That'd be fine.
Okay, I will send you an email confirming that after I get back to my desk.
Okay. And with that, I don't have any more questions. I want to thank you for your time, Amanda, and explaining the alternatives that Mutual Omaha has to offer. Please feel free to contact myself or Rick Prusha. We're both in the LTC department. And with that, I thank everybody for their time.
All right, great. Thanks, guys.
Thank you.